Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of CBOE's Options Institute, and it's Monday, September 20th. Now, as I sit here, the S&P 500 index is lower by about 1.7%. From a technical standpoint, the broad market closed on Friday right at its 50-day simple moving average. That variable level has been supportive since fall of last year. There was one close below the 50-day in March and one in June, but for the most part, the 50-day has held. Assuming no significant bounce into the close, it'll be interesting to see how the markets behave going forward. Friday's expiration saw significant amounts of gamma roll off. If we close below the 43.45 mark, it will become the largest drawdown from highs in calendar year 2021. Now, to date, the biggest sell-off in the S&P 500 is a meager 4.2%. During a typical year, the S&P 500 experiences somewhere between a 12 and 16% pullback at some point. You can read more about that in CBOE's Inside Volatility that will come out tomorrow. The VIX index is measuring around 25.5 as I sit here. The futures term structure is very flat and trading around 25 in the front three expiries. The VIX is at the highest level since May, and option volumes are running hot today with more than 1.1 million SPX options on the tape and 500,000 VIX options trading by 11 Chicago time. Now, looking at the calendar, we have a Fed meeting this week with a decision and press conference on Wednesday. It will be closely watched to see if Powell and company shift expectations for a taper forward given the jobs and inflation backdrop. So we'll keep our eyes on the technical levels and know that the Fed can move markets later this week. Options give you options, and they're trading actively today. That's Vol 411. Thank you very much for tuning in.